red as the devil's dick. You're busted.
We've got a bloody day in the market. Bitcoin selling off a bit. Most of the market is selling off on this news today. Core PCE hit 2.8%. This was a 0.4% increase in February. Consumer spending also grew 0.4% for the month, which was below the 0.5% forecast. All while personal income posted a 0.8% rise against an expected 0.4%. As for the core PCE, analysts or economists surveyed by Dow Jones have been looking for numbers of 0.3% and 2.7%. We got a 2.8%. Now, for all items, so not just core, but the PCE as a whole, we saw a 0.3% rise on the month and a 2.5% from a year ago. And our last read was a 2.5 as well, both in line with forecasts. And that 2.5% is basically the same as last month. And as said by Ellen Zentner, sorry if I butchered that, chief economic strategist at Morgan Stanley, says it looks like a wait and see Fed has more waiting to do. Today's higher than expected inflation reading wasn't exceptionally hot, but it isn't going to speed up the Fed's timeline for cutting rates, especially with the uncertainty with tariffs. Now here's the little chart that kind of shows you where we've been going, where we've been. You can see that core is rising, but all items PCE is basically flat. And here's another one showing you basically the year over year, where we've been, where we went to when inflation was at its peak. We've come down considerably, but we basically bounced right around that Fed's 2% target, a little bit over it, and it has been basically rising since then. But yeah, I mean, if we're going to get a Fed cutting rates, we need these inflation rates to come down. They keep coming up. There's going to be more worry about a soft landing. Now, looking at the Fed Watch tool, this might take some time to adjust, but the market by the year end is still anticipating 3 cuts, and it sees this as the most likely scenario. Pretty unlikely to get a cut in May still. However, June still shows a likelihood of 1 cut. It might take some time for this to update. It does say that this was as of March 28. Where did I see that? I saw it somewhere, I promise. I'm not lying. Oh, data as of March 28. We will likely see this adjust in the coming days as PCE is digested a bit more. But this is definitely scaring the market a bit. We've got a pretty much red day across the board, except for the safe stocks, the PGs, the Cokes, up very slightly. Now, someone the other day was saying technicals matter very little. Then why did we break this and come down and test our ascending trend? Try to hold it and then break it and head down to this zone we were talking about, this roughly 83,000 area, our previous low point, while we were trading sideways. We are right there right now. We're either going to bounce here and hold it up, or we're going to break down, likely test our next low point, a point that we bounced off of on this ascending trend, this roughly 81.5. If that fails, we're likely to test 80. Looking at our descending trend, we did not get a breakout. We got rejected. We kept seeing these wicks come up and then getting rejection. False breakouts and rejection, similarly to what we have seen in the past with this descending resistance. Bitcoin is pretty oversold. When we have seen it this oversold, at least on the hourly, we do typically get a nice bounce. Last time we were at this level of oversold was March 9. And this is where we were on March 9, 76,000 or so. We did get a nice reaction, a nice bounce from oversold. Again, back here in February, we actually saw a bullish divergence. The RSI, or the price was coming down. The RSI bottomed out already and started rising. That's the point where we bottomed out on the RSI. And this is the point where we bottomed out on the chart. This bullish divergence did mark a short-term bottom, and we did see a nice reaction from 78 to about 95 before selling off. I would anticipate that we try to establish this as a support, at least on the short term, and then it's up to holding this roughly 83,000 area, looking out for a bullish divergence, looking out for the RSI bottoming out before the price bottoms out. I think we are close, at least to a short-term bounce. Look at the Atlanta Fed's GDP expectation. We saw it dip all the way down to like 2.8, and then it rose, saw a little sign of relief, going from like negative 2.8 to like negative 1.8, I think, if I remember right. And now it is back at a negative 2.8% as of March 28. There is a chance that the Fed cannot, manufacture, create, accomplish a soft landing if we keep getting inflation rising, specifically PCE, the Fed's preferred gauge of inflation. If we see these continue to rise, how is the Fed going to be able to cut rates? How is the Fed going to be able to lower rates to help the economy, to make loans cheaper, making interest rates for homes, making interest rates for debt, making interest rates for cars lower? If we do continue to see more and more rough times in the economy, these are great times to take advantage of, in my opinion, Bitcoin, the Bitcoin miners you believe in for the long term, and the large caps that you like, the companies that are consistently profitable, always growing revenue, companies that will be around decades from now. Don't be fearful of a massive bear market. embrace it. Remember, bull markets make you rich, but bear markets make you wealthy. Now, we do have some positive news from the spot Bitcoin ETFs. On March 27, spot Bitcoin ETFs recorded a net inflow of 89 million. This is the 10th consecutive inflow. Now, what are whales doing? Are whales looking at Bitcoin's price and saying the cycle's over? Saying, why isn't Bitcoin back at over 100,000? Why isn't Bitcoin at 120,000 now? No, they are embracing this opportunity and they are accumulating. While retail's pissed off, while retail's worried about their price of their portfolio, they're seeing these dips as buying opportunities. Some of the big boys are more bullish on Bitcoin than people that have been into Bitcoin for multiple years. They are quickly understanding the real value of Bitcoin, the rarity, the scarcity. There is never going to be another Bitcoin. Bitcoin's network will never be surpassed by another network. Whales have accumulated 129,000 Bitcoin since March 11. This is the strongest accumulation rate since August of 2024. What happened in August of 2024? Do you guys remember? Bitcoin went down to 49K. There's a bunch of fear because of Mt. Gox. We thought the selling would never end. Some of us at least did. The whales took advantage. The whales loaded up. While people thought the top might be done, the spot Bitcoin ETFs have just manipulated the market. Bitcoin's 74,000 top at the time was the top. We drop down to 49K, bottom out, and recover, go to new all-time highs. Seems like the whales must know something, huh? While retail gets shaken out of their positions, especially those that are new, the whales are happy to buy your Bitcoin. Now, how are you guys feeling on a day like this? Do you see some great opportunities in the market? Or are you 100% fully invested and you can't stand days like this? If you're about to retire within a few months, I could understand the fear. But otherwise, why worry? But anyways, thanks as always for watching, guys. What are you buying today? How do you feel about the economy with this PCE data? How are you feeling about GDP with the Atlanta Fed expecting a higher negative GDP? And more negative, higher negative, lower negative? Anyways, a negative GDP. In my opinion, these are the times to take advantage while there's fear in the market. But anyways, I'll leave it there for now. Hopefully you guys have a good weekend and I'll see you on Monday.